All right, what's going on? Chris here. We're going to go over the daily overview, starting with the Covey portfolio performance. So, out of all of this, that's pretty much the most positive thing here. We're still second place. It's cool. Um, yeah, like, I don't know. 57% monthly gain, 10% on today's gain. We were smoothing out here and we distributed to the upside. So we're doing well. The competitor going to the leaderboard, he has half of his portfolio in gold. So I don't know. I think I'm going to get the top spot just because gold is not immune to fragility. Gold, and then a minor. And that's like half his portfolio right there 40, 55, 54%. So I don't know. I don't know if he's going to be able to survive. Like, I think he's betting on the volatility of these carrying him. I mean, he's doing well on the month, but I think he's a little early for gold. Like if he hasn't seen gold, it looks like it's about to roll over, and it's not immune to fragility in the market, and that's what's exactly happening. All right, Ninja portfolio performance summary. So this was a weird day, mostly because it was pretty much decided that we're not going up. Um, we're going up, but not to our target. That target is pretty much taken off the table. So um, basically, what's happening is that the market is so strong that if we go here, the market is so strong that we have an H4 untested breaker here that the market can't even go back to equilibrium. It's so strong to the downside, it can't even go back to equilibrium. So we got people abandoning ship and eating losses into December, and we just had another H4 breaker to the downside, and it's actually presenting a really good setup to go short once we go into it. So right now it's a long from here, but once we go into it, it's institutions, everything's gonna flip short. I mean, it already has kind of flipped short, but we're definitely gonna go back into it and retest it. The line, the H4 breaker, this area, where the 72 moving average is, but yeah, it just looks bad. Okay, the Ninja portfolio performance. So this is the overall Ninja portfolio performance. What was bad was I was looking at the Williams Money Flow Index, which tracks institutions. It's just institutions aren't trading yet. They're not back until the new year. So I kind of ate a bullet right there. 71 grand to 55 grand, so lost around 20 grand. So it's not cool. Like, I'm not hurting super bad. I mean, it's roughly let's see, 71 minus 55 divided by 6. So roughly almost 3 grand per account. So, I mean, it's not super bad. Like, I'm still in the game, and there's still more volatility that I can win. Um, so it's not all that bad. I can get it back, but it's not pleasant. And the reason for making these videos is to hold myself accountable for my risk management, because that's what fell through. We look at the trade plan. The red is the rules I broke, and I actually got stuck in my bias, and that's something I have to add on research or experiments, is just getting unstuck, preventing being stuck. Let's see. Experiments to stop getting stuck in bias, because that's what's happened. Like, I hold on to a confluence or like something I see, and then I'm like, that's it. Like that's it. Must do this, and I need something that can disagree, and something that I label as like a chief disagreement thing. Like I can have a bias, but as long as I have like a chief disagreement rule or disagreement guide, this is going to be it. When trading against the H1 H4 order blocks, which I did, use the 15-minute breaker as like the key direction. So it's the best way that can keep me objective in just a bias direction that's filtered, because it's usually goes H4 5 minute for my fractal time. It's usually weekly H4 and then 5 minute 4 hour, and the 1 hour trail as a guide for like sell signals. So and I mean it was difficult. For example, this is the hourly. I know there's a lot here, but if we were to just erase, okay, we'll go ahead and just delete all this, and then we'll put it back by backing into it. So this was what we were looking at. The band in the middle is dead center. So that means there's a lot of chop, a lot of noise as to like the direction. It could go either way. And whenever it cleared the order book on this hour and pretty much that hour where we had an outside, but we pretty much closed back in, that was the one that was really confusing. But these sell signals were right on point on the direction to go. And we pretty much we cleared the upside twice. This is 9 a.m. and 10 a.m. And that was the part where I don't know, I should have been more keen. I just kind of thought, I was expectant it was going to go up, and that was not the case. And I did have a chance to take profit to have a wash on the day, but or at least only $500 loss per account. But I didn't take it. I just thought we were going back all the way up. Why take profit on the runners when it could make more? And that's kind of just where I started to run into trouble. So, lesson learned. Now I have something to not get stuck in my bias that I only thought it was going up. And I need something to disagree with me, and something that I can like knight as like the chief acceptable thing that can disagree with me that I will listen to. Because when usually I'm stuck in my bias, I don't want to listen to anything else. I got blinders on. This is kind of what I'm thinking. But if this disagrees with me, I need to really take a step back and be like, okay, maybe I'm wrong on the day, because that's totally possible, and that's what exactly happened. So maybe I should just like isolate it. So the 15-minute breaker is the thing that is like the chief disagreement indicator for bias on the day. Boom. So that's something that we're going to do going forward to make sure we don't get stuck on the bias if we get a disagreement. And if we do get a disagreement, that means we're going to take a step back and then maybe not trade for the day. Even though we have a bias, if it's going against it, then that's probably a really bad sign that something's wrong. Because everything's on probability. There's no certainty. So like we need to make sure that we can wake up when we need to wake up. Okay. So yeah, that's pretty much it. We pretty much broke the rules of like the 1.5% loss per day. I was doing really good. Again, down to 3%, but I think the getting stuck in the bias is a big issue, and I think we really need to attack that for me to be able to bring that down from 3% loss per day to like 1.5% loss, and I think that's using something like that would help a lot. So that's the Ninja Portfolio Performance Summary. We're okay. We're still in the game. We can make that money back. We can make it back quickly with falling apart, going to 20% downside. but we just need to be a little more methodical, be a lot more slow when it comes to something that takes out both sides of the order book. Okay, closing thoughts on the S&P 500. We're going to take a look, and um, S&P 500, we basically broke through weekly support, and it's about to flip. If we were to put this thing all the way through and sink it, look at that. It's right at daily resistance. So we could go all the way deep in there, and but ultimately, I think it's going to reject. So this is the weekly resistance. We're going to have to label it. Uh, Actually, we don't need to. It's why is there two red lines here? Okay, we 38, 34, 20. So we'll close this. 38, 34. So there's yesterday's high. I don't know. Maybe we don't even get back above yesterday's high. I don't know. It's too complicated because we're doing two data feeds. But anyways, we have an H4 breaker, and we have daily supply. We have the weekly resistance, and the 72 moving average. Where it's going to go, we don't know. We have some kind of guides as to a setup, and that's kind of what we're working with. We see that it's at pretty much close to weekly support and daily support. We kind of thought we were at weekly support with this week closing, as a doji to the upside, but this totally ruined it, and it looks like it wants to go lower on a rejection here, and H4 breaker to the downside, and that's pretty much it. We look at a pitchfork connected from the swing highs and swing lows here and here, and connected to that swing high. We're in the buy zone. This is the 0.618. This is the 0.764. And then we come into here. This is the 0.382, the rejection zone. So this is in an 8-hour line made from the closes here. And we got a swing low here that we're going to use as an alert here for when we get back above and go back below a reclaim on that swing low to the downside. We not only have a reclaim alert here on the swing low, we also got an alert on, I think it's the hourly here. I think it's on here. On this hourly close here, we're going to use that as part of the head and shoulders. We're thinking price is going to come into this trail. We got a trail right here. It's these red dots, and it's the one that makes these down arrows. And we're thinking it's going to go into that. It's going to go here, and it's going to hit it, and it's going to cause a swing failure pattern, get back below, and then consolidate, and then reclaim to the downside, and that's it. Neckline right there. So that's kind of what we're expecting as far as like a setup, and we're going to tiptoe in. We're going to tiptoe in to the short side and make sure we don't get robbed on our bias like we did today, because that was really sad. Just because, I didn't have any entries to the downside, no signals. That's how strong it was. There was absolutely no signals to the short side, and this is a 3-minute trail, and we go to where we were. This is the opening of the day, and we cleared the order book, and going short, there was no signals for an entry of a pullback. There was no pullback that we could really use to the downside on the 3-minute or the 5-minute. Only on the hourly did we have a pullback signal worth getting into. It's just wasn't thinking of that. I was thinking of a long. There was no downside signals all the way down here. So that it was really strong and really choppy, and you could tell by the gray band not even touching either side of green or pink that it was a sign of just a lot of chop. And these sell side signals were correct. It's just I don't know. Sometimes I don't take those seriously. Like this that we had here, I didn't take it seriously. I thought with the bullish bias we're breaking through, and I should have been watching closely to the hourly closes because it was clearly rolling over once if I closed on that hour at the 10 a.m. But for some reason, I just was so bullish. Like I was like, dude, it's going up. It's going up. Like it doesn't matter. And it was just so wrong. It was just so wrong. But the good thing is we're getting ready for another setup, and we're gonna kill it and have proper risk management. You know, we're gonna have a chief disagreement indicator for the day, and if it disagrees with us, we're not gonna trade, or we could just wait. Oil. Looks like it's following the S&P 500 for the most part. Retested resistance. Now it's sell the rally. Now we're kind of waiting to see if it can hold. Yeah, I think this is what I want to do. If it can hold here, and we're gonna go test these lows. It looks like right now. We're at it's possible support. I don't know. It looks like it closed the day underneath this. Basically, the bull trap. It went into the bull trap, and then now it's getting rejected from the bull trap, and we're testing support here. If it doesn't hold, it's going to go lower to the yearly open, and we're going to test the yearly open, and it could go lower. So right now, DRIP, the 2x bear short oil, is making wonders for us. We're doing 8% on the day. So it's something that we want to see that continue to pay us. So we'll see what happens. So we are looking for fragility, meaning that gold will not survive. We're looking at credit spreads, HYGH, and this is kind of what I mean when I say fragility. Credit spreads are just dropping like a rock. I mean, we pretty much closed below this daily support here. So this flipped, and it's no longer support. It's pretty much resistance. So it's really scary to see that, because then you kind of, I obviously didn't look at it today, but I mean, this happened throughout the day, so I don't know if it would have really mattered. It would have been too late by the time I saw it. But this signal here, this close on the previous day, would have been a good signal as to just the intention of what's going to happen today. And I didn't catch that. But I did catch this weekly close, and that I was like, oh, wow, like it's dropping down, so it looks like maybe the market's going to follow that. I did say that either at the beginning of this week or at the weekly close. But LQDH, so, my bad for not catching that. Some things you get so honed into, like the Williams Money Flow Index. Who would have knew that near the end of December it just becomes less effective? So, with the LQDH, we're into the same deal. We are making our way to weekly and daily support, and it looks like it doesn't look good. All right. Now, currencies, they look a little weird. So we look at the euro. Looking like it's holding here at the yearly open. It looks like we just opened on the day. So I don't know what's going to happen. This could be a test and then a rejection here. We're kind of waiting, but as far as the close on the day here, it looks, I don't know, a little hard to tell what's going on, what it's going to do, if it's going to break down or what, but it has a possibility of breaking down. Japanese yen is on its way to breaking out. I don't know what's going to do next. It looks like it's at daily support. We just need to reclaim this weekly and this level on the day. Close above it, it's pretty much over. and then US dollar. I think it's pretty much going sideways. There it is. Inside bars going sideways. I know we had a weekly breaker to the downside, and it could go down because the dollar went down during the COVID nuke, and I don't think it's too far beyond imagination for it to go down to whenever we have that fragility moment. In the VIX. VIX winding up. We're holding from daily support. Never really thought that the daily support really mattered a whole lot, but apparently on the S&P 500 it does. And buying at support, selling at resistance. If we were to look at the S&P 500 right before the dump, the daily support and resistance, we came into it right there. And this wick was today. We wicked into it and got rejected, and that should have been a huge red flag that we peaked above and came back below on a reclaim to the downside, and that was momentum to the downside. So that was something that was my bad, that I kind of gave up on with all this chop. I was like, why even do the support and resistance on the daily? It's just so crowded. But in terms of on the reclaims, when it wicks above and comes back below, that's like a huge signal that you need to key in as far as like support and resistance on the wicks on the closes of those days. So next time, set an alert. So I need to set an alert on the. That's not what I wanted. Set an alert on daily reclaims of resistance or support to the here we go. Reclaims of daily resistance or support alerts. That's another thing I would need to do. Just set alerts for reclaim. So the VIX, we're wrapping things up here. Looks like it's gaining strength. Daily support, where we had an up day close, a higher close on the day, and we're coiling to the upside. If we were to look at H4 breaker and see kind of what's going on there, it looks bullish. That's kind of what it's saying. I don't know where the last H4 breaker was, but if we look here, and here we could see that we're currently in a really deep retest, and we got a bullish H4 order block here. So we can expect it to gain strength over time, and we want it to start closing above these highs for reclaim. So if we started closing above this high on the H4, that's something that would be significant. That we would, that's not what we wanted to delete. That we could look forward to going forward. Got it back. So we would just need an H4 close above that H4 bar, and it would be seen as a swing failure pattern of a reclaim. The bears pushed out, double bottom, could be bull flag right here to move up on the H4. We'll see. But looking like it's definitely at support here on the weekly. Enough said. So that's pretty much the daily overview. Trade plan for Thursday. I think I kind of went over it. We got that set up with the diagonal trend line. This was made from the 8-hour. I took it from this candle low, which is a close, and I took it from this candle close in the 8-hour because it looks like a really good line that looks confluent with the H4 breaker and also with daily supply to where it can wick above and then come back below, and this H4 swing low. This confluent area of a reclaim to the downside would be a really good entry signal to the downside. So that's kind of just what I'm getting at, and explains why maybe I was so bullish today, is because it looked like a really good place of support until it broke, and it wasn't evident as a capitulation yet. Now, the close of the day, it's definitely evident as a capitulation. I think I was looking at it from this point of view, the 0.382 level, and when the 0.382 level didn't hold, I was expecting a wick up, and when the wick up didn't happen, the daily close happened, and I had to just investigate, and this is kind of what I found. It's pretty much a setup to go to the downside, and that pretty much there is no chance we're going to reach this target to the upside. Instead, this is the target, and then once we get here, the target is all 20% to the downside. But how much ground we cover in one day is like difficult to determine. But we're going to be continually looking at if there's going to be any changes in the timing solutions, just to see if there's confluence. Signals that matched the what's happening with the Q Spectrum 2 matched the movement that we're seeing now. The hard cycles are on their movement up, but I think they're all going to start kind of falling in line with each other come the first week of January. So when we take a look at what's going on here, this one takes a little longer than the rest. Yeah, it looks like we're on our way down, and this kind of move up, I don't know how strong that will be. It could be really strong, but I don't know. I don't think the magnitude is really there. I think it's just a slow. So I don't know. The current move is correct, and it could change by next week, and that's kind of just my last thoughts on that. And then here, it's really odd. It's saying that we're gonna slowly go up. So we don't know how slow this is going to be, but if this were literal, we would have till pretty much next week to be prepared for the ultimate eventual move to the downside, ending at the bottom 3,000, 3,200 in March, which is very reminiscent of the COVID nuke. And then so it's kind of just what we're dealing with, like possible, this is what's going to happen. And that's kind of why there's this peak here, not to show where price will go, but where the date that we might roll over, which looks like the first week of January. So I don't know, that's kind of what I'm thinking. It looks very deceiving, where it looks like we're in an uptrend, that we're going to have upward price movement. And obviously, with market structure, that's not happening. We just had an H4 breaker to the downside, and we just need a retest and resumption to the downside. And who knows what's going to happen? We just gotta have to take it day by day close. So that's pretty much it. Thanks for watching. See you in the next video.